Hello, and welcome to the Market Bull podcast. Please note, topics and stocks discussed in this podcast are not financial or investment advice. So hello and welcome to the Market Bull podcast. I'm your host, Ben Kostrich, and joining me for the first video recording session of the show ever is David Prentice, the Managing Director for Brookside Energy. Welcome to the show, David.
Thanks, Ben. It's nice to be with you. It's an interesting choice to have me on the first video recorded podcast, but there you have it.
Yeah, I was going to take it as a beautiful compliment that you must be well suited and ready for this opportunity.
Apparently.
Yeah. So tell us a little bit about yourself. As Brookside Energy is an oil and gas exploration company, primarily focused in Oklahoma. But before we dive into the whole story about the company and its current sort of reporting season and everything going on, what's your history?
So I've got nearly 20 years. It'll be 20 years next year working onshore in the United States, and all of that time in Oklahoma and Texas. So a long, 20-year body of work. I started out with a company called Red Fork Energy, which I founded back in 2004, 2005, and we built a really strong business, producing business in Oklahoma. And ran into, at the end of all of that, sort of ran into some sharply lower oil prices. So, this oil and gas business is a cyclical business.
Yeah.
So, we ran into that volatility. We had a lot of debt, and that business ultimately failed, which was painful. It was extremely painful for the shareholders and not very pleasant for myself either. But we dusted ourselves off in 2015 and I guess took what we learned from that experience and founded Brookside and some of the, I guess, the key learnings that came out of that are really driving the success of what is Brookside today.
So then, even looking back, Brookside was founded in 2015, 2016, late then. So what's really changed or revolutionized that company over the time? Because you can almost say, as a devil's advocate, oil and gas nearly isn't glorious commodity anymore. There's clearly the demonization of it. Going into that industry and seeing that change from your personal perspective and also now that the company, what's really revolutionized and transformed in the company?
Yeah, so I think the industry's done a pretty poor job, to be honest, about the industry as a whole has done a pretty poor job about messaging around what are the benefits for humanity around the production of oil and gas.
Yeah.
And look, we as executives and people that work in the industry, we all live on this planet, and we all, we're all consumers, and we all we understand the challenges that the world faces in terms of climate and the transition to renewable. So we understand all of that, but fundamentally, it's been hydrocarbon that has underpinned the fabulous benefits that the world has benefited from, I guess, in terms of the Industrial Revolution and the standard of living that everybody enjoys now. So we need to find that balance to say, okay, yeah, look, we want to be more responsible with, in terms of our environmental performance, but we also need to understand that the population continues to grow. We consume more energy every year, and oil and gas is going to play a role in that for the foreseeable future. And so from particularly in Oklahoma, the industry is a very, very integral part of life in Oklahoma. Most people, if they don't work in the industry directly themselves, they'll have one or two family members that do. All of the drilling and exploration activity takes place on private land, and so there's a very strong bond between the mineral owners and the producers and explorers, and it's a very well regulated industry. So we're quite sort of fortunate to be in that space, and it's an exciting place to be.
So, the history of Oklahoma in particular, already it sounds like it was a well-renowned and experienced jurisdiction for oil and gas exploration. Whilst you've been there, what's really changed and elevated within that part of the world?
So it's really been, I guess, 100 years of a body of work. So that's the first thing. Tulsa, where our head office was the oil capital of the world at its peak. So it's, companies like ConocoPhillips were founded there, and lots of the big names that you'd be familiar with all came out of that area. So there's been an enormous amount of success, a lot of wealth generated, and I guess what we get now from the benefit of that is all of that infrastructure that was put in over that period of time, the understanding of the geology, all of the data that comes with all of that is just a marvelous benefit to companies like Brookside that are operating in today's environment. But what's really changed, I guess, in the last sort of 12 to 18 months and even going further back than that is really the application of modern technology. So how do you take all of that data and use the very latest technology to improve the way you go about exploring, improve the way you go about developing, and improve the way you go about producing. So that's really that's what's changed.
And has that really emerged over the past handful of years? Because I know it's really a phrase that's coming up a lot is the advances in technology are making it almost easier to revisit areas that may have been neglected or arguably harder to target originally. I mean, what are some of those sort of technologies that you're applying at Brookside?
Oh, look, I think it's an ongoing process, right? Certainly that the use of technology and its impact on improving the way we get more out of the resource has been something that's been ongoing for a decade or more, and it's ongoing. There's innovation all the time. That's one of the really, really fantastic things about the United States is you've got this unique combination, and particularly in Oklahoma, a unique combination of very high quality reservoir rock, fantastic infrastructure, so lots of pipelines and takeaway capacity and refining capacity. But most importantly, you've got all of these very smart people that work in the industry who are constantly innovating. So we've got the service companies there that are always looking for ways to do things cheaper, better, faster, and get more out of the resource. So in terms of examples of what we do today that probably wasn't done a decade ago is really around the use of technology to look at the rock as we're drilling it. So directional drilling to make sure that when we're drilling we stay in the very best part of the productive zone. Things like the use of computer imaging and monitoring of pressures while you're doing your hydraulic stimulation. All these things are leading to better recovery of the resource, which is ultimately making the industry more efficient.
And I mean, even me hearing you now say, it's in the United States, we're sitting here in Perth. I mean, surely that's going to have, how would you even go about starting a day or even utilizing work? Because I mean, nowadays it's a lot easier to communicate and get things done from a global perspective. But I mean, surely you're involved in, almost being up at odd hours of the day and starting your sort of daily routine very differently, considering that all operations and workings are in the United States.
Yeah, absolutely. So, I essentially work in two time zones. I work, during the day, it's a shareholder focus. So, it's I guess dealing with the corporate side of the business and engaging with our stakeholders here in Australia. Early in the morning and late at night, it's about staying in touch with the team in Oklahoma. Yeah. But the technical team and the operations teams all based in Tulsa. They're a very experienced team, and things like Zoom obviously makes that communication a lot easier. But yeah, the early mornings, early morning calls and late night calls are a part and parcel of what I do.
Gotcha. And then, I mean, looking now over the last couple of years, we've had naturally COVID. I mean, that has almost highlighted ways to deal with remote working and operating projects. But I mean, if you're looking back there, I mean, especially oil, there was a real point in time there where the oil price and the spot price and that whole sector just got smashed. I remember seeing it was, negative at some point, which was just absurd to think about. And then now it's had this incredible rise. I mean, thinking back over those last 2-3 years, I mean, what was it like being in your position and seeing that unfold, looking at oil and then gas as well?
Yeah, so that period where we saw the oil price trade down negative, to negative. It's obviously a tough time. I mean, from the company's perspective and from my personal perspective, I mean, we've always had a very strong vision of what we were trying to achieve, and we know what the steps are required to actually get the work done to achieve those outcomes. So we sort of try our best to stay focused on that vision and what's going to be required to deliver on those on that sort of strategy. But certainly, on the day you wake up and the oil price is negative, and your shareholders are concerned, rightfully concerned, and so you're fielding calls, and and I guess really trying to sort of say to people, look, we work in a commodity business. Commodities are volatile, and it's about taking advantage of those opportunities, and staying focused on what you're trying to achieve.
Yeah, because I know I was following the oil price. It got to ridiculous levels, and then naturally it's had to pull back now, but being tied to commodity, there's always fluctuations naturally. But diving into Brookside Energy, and you've got two main projects in Oklahoma. It's the scope, and there's another one.
So we're in the Swish,
that's right,
our Swish project, which is our flagship project, which is in the Scoop play. So lots of acronyms there.
Yes,
we do have a small project in the Stack play, and then a really exciting new project called the Bradbury AOI, which is sort of in the Ardmore Basin. So they're all in that area, sort of south of Oklahoma City. In an area that's got a long history of exploration and production, and we've really benefited from, it goes back to the point we were discussing earlier about all of that data being available, and you can sift through that data and really use that for the prospecting part of our business. So people often hear me talking about this sort of prospect, prove up, and monetize, which is kind of our catch cry. That's what we do. That's what we're good at. And so if you look at our project portfolio now, we've got our Swish AOI, which is a wonderful discovery that we made in the Anadarko Basin, which is now in the monetization phase of that, if you like, that sort of three phase approach. And then we've got this Bradbury area, which is brand new at the top of the funnel. We just drilled one well out there. We're testing that now. It's looking really good. And so that's another, something coming through the pipeline. So
it's now you can almost say, a very different phase of the business life cycle in regards to now you've got monetization. You can actually start executing and distributing it. I mean, what are some of the challenges or even considerations that you are having to make now as you're venturing into this new stage of the business?
Yeah, so look, one of the things is, we made this discovery in Swish. We had a fantastic year last year. We've now drilled 4 very successful wells into that acreage position. We've got another 20 odd to drill in terms of the reserve inventory that we've got there, that we just announced in the last week. So the challenge for us now is to look at how do we get the best result for shareholders out of this wonderful reserve that we've now defined. So it's a matter of looking at the best way to go ahead now and develop up that huge asset. And it's a bit I guess if you think about it in the context of a lithium or a gold or whatever, the deposit's been defined, it's sitting there in the ground, and now we're looking at the best way to we know what it's worth, and now it's looking at the best way to develop it.
Okay, and then going forward with that, when you're looking at the demand for oil and gas, I think it goes without saying that we're trying to approach this EV, this amazing renewable energy system, but I think the reality check is that it's not just going to happen overnight, and that we need all these other fuels, and gas and oil are never going to be really removed. It's just they potentially might not have as much of the pie chart in revolved. What do you see the outlook for oil and gas in particular, looking at this next sort of 10, 15, 30-year map of the commodities?
So I think there's an interesting point you make there about the energy mix, right? I think what we've seen, and it's probably lost on people, is that the overall size of the pie keeps getting bigger every year.
Yeah. And
so, sure, we're building up this renewable capacity. But in reality, the demand for hydrocarbons, is increasing as that pie keeps increasing. So the size of the pie keeps increasing. So, and at the moment everybody's focused on, particularly in the last sort of, the last quarter, if you like, people have been very, very focused on the demand side of the picture, right? So everybody's looking at saying, well, we think there's going to be a recession in the US. Globally, economic conditions look tough. Interest rates are rising. So we end up with pressure on the commodity from the demand side. But no one's looking at the supply side. We've got decades of underinvestment in oil and gas. We've got we haven't seen the supply response from the US explorers and producers that we saw in the 2010s, where there was a massive boom and lots of drilling. So we haven't seen that. We've seen a much more disciplined approach this time round. And so what that means is that supply is not responding. And so yes, we've got this question about demand, but inventories are still very low. We're not refilling the stocks, and so ultimately, I think that's very positive for the outlook for the commodity going forward. And from our perspective, we were all about, from Brookside's perspective, we were always all about saying, look, we need to find projects that will deliver very strong rates of return, even at lower commodity prices, because we know what happens when you get involved with projects that only work at very high commodity prices. So that's baked into our business model. Measuring risk and understanding rates of return across the commodity price cycle is a key part of our business.
And because that's the interesting point, that there's not really been any focus. It's as I touched on earlier, it's almost been demonized over the last 20 years or so, and it's really exponentially taken off now. So with EVs, and that everyone just wants to forget about the gas and oil and these trusted and durable ways of using energy, and the idea that we can just suddenly switch it off and suddenly we've got this beautiful clean energy. It's just not quite that reality check. So I mean, from an investment point of view and just the general feedback being within the industry, have you noticed that there's been this shift towards, again, I look to 2021 and coal being one of the most profitable commodities, even though it was sort of the demon child of the economy. I mean, what have you noticing underlying all the news, the publications? Where are you seeing the drive, the investment decisions, and even looking at banks? I mean, they'll probably say that they don't necessarily support it, but there's big tier banks that are still funding and getting into this because they know that it's still going to be so necessary for the future developments of economies and cities and everything.
Yeah, absolutely. Look, I think we've seen, again, taking us back to the 20 teens, we saw probably arguably too much capital came into the industry. We saw overinvestment. We saw a growth for growth's sake sort of mentality. That's been wound back now in terms of people's appetite for investing in the oil and gas business. I think we're starting to see probably late last year and then early into the beginning of this year, people are going, well, okay, there's a balance here, and so we're starting to see a lot more. I wouldn't say in terms of attracting market attention, we're certainly not we're not in the lithium space quite yet, but we are seeing definitely signs of people, the realization coming in there that, well, okay, guys, there's room for everybody here. And when the commodity price starts to improve and people start to look at the economics of our business and seeing what success looks like, and we had a fantastic year last year, 15 million odd in operating profit, 50 odd million in revenue. So people start to say, well, look, small business that's got this very large resource, and they're actually generating cash. They're funding their own operations. It starts to attract some investor attention.
Well, and that's the old adage: you're doing everything right, and then it's more a reflection of, well, hey, like, look at us in a polite sense. Like, why do you reckon there's been that neglect? Well,
that's the thing, right? So particularly in the Australian equity market, in the small cap space, the capital is very mobile. That's a good thing, right? People can move their capital around in across the different sectors, and you do tend to see this kind of what's fashionable, what's kind of and it tends to be driven by commodity prices and probably by the thematic, and at the and oil and gas hasn't been a favourite of investors as you pointed out. But what people are starting to see is that the numbers don't lie, right? Like at the end of the day, we still need the oil and gas. The demand's there even as we move through a period of sort of economic challenges. The demand's still there. The base demand is still there. Supply's being limited, so smart people start to look at that and say, well, that's positive for a pricing outlook. Look how much money these guys can make when they run their businesses properly. It's a compelling investment. So that's kind of where we would see it.
And I mean, looking at the United States and looking at Oklahoma, I mean, when you're looking on the global outlook of the big players, I mean, you've got particularly the geopolitical tensions in some countries at the moment is really highlighting almost nerves in investors, but also countries in securing commodities. I mean, I look to, the Russia-Ukraine war in particular, that had huge implications on oil and gas in particular. And we're seeing that sort of ripple effect into Europe now. And there's this almost scramble to try and figure out what the heck to do. And you can, I already see, being in Oklahoma, there's so many ticks and appeals to being in that jurisdiction. I mean, what sort of factors and impacts does that have on the industry, and where do you see that being beneficial for Brookside?
So I think energy security has become a real theme for governments around the world, and I think that's obviously the Ukraine war is has been a catalyst for that. But even before the Ukraine war, we saw difficulties in Europe and the UK with difficulty during their winter having enough gas to heat their homes, and understanding that if you're getting your gas from a single source, and then there's supply disruptions, what are the implications for that? So people are starting to understand that governments need to have an eye on energy security and be able to have stable, guarantee stable supply. We've seen, similar debates here in Australia. So I think, we're starting to see the community, the broader community and investors and governments all starting to take a step back. I heard the Premier of Western Australia on the radio this morning talking about, gas is going to play a role into the foreseeable future in terms of, providing that energy security for Western Australia. So it's there. People are starting to understand that, it's not a demon. It's part of the energy mix. It's part of the energy mix. And, in regards to Oklahoma, we're just very fortunate that we operate in a state that has a very pro oil and gas development mentality. As I said, we talked about that earlier. The private land, a strong regulator. So it's a virtuous circle. We've got this fantastic mix where responsible development. We're aligned with the people who live and work on the land, so the farmers, and then we've got this fantastic regulator that makes sure that the resources are developed efficiently. So, and most of what we produce is refined and consumed, within Oklahoma, Texas, certainly within the Midwest. So it's we're not sort of exposed really outside of pricing. We're not really exposed to these sort of global the global thematic.
Yeah, and going back to the projects we were talking about, I mean, we've just finished the most recent quarter, and there were some promising results in there, or even credit to you and the company's progression. I mean, where do you see the future going for Brookside Energy, and looking at each of the individual projects? I mean, what is the ambition or drive, and where do you want to keep elevating the company towards?
So there's a couple of things there. We had a really strong year last year. I touched on some of the points there. Then we the first quarter of this year was another good quarter. We had a big capex spend in the first quarter of this year, funding the drilling of our two latest wells. But really interestingly, as much as we had that large capex spend, the trajectory on that capex front, is now sort of basically delivering up this fantastic production results that are starting to come through. So if we look at the first quarter financials, you see the impact of the cash going out for that capex spend, but you also see the volumes starting to increase, to trend up, to increase, and we won't see the financial benefit of that until next quarter. So looking forward to a really strong second quarter. I guess in terms of as I touched on earlier, in terms of the outlook, we've got we've just announced our maiden reserve report for that Swish AOI. So 5 cents a share in discounted net present value for the reserves that are coming out of that Swish area, and we've taken the decision as a board to look at doing a buyback up to 10% of our issue.
Well, that was going to be my next point. Is that I saw that also feature that the board has decided to buy back stock, which I can imagine is it's a decision that goes, as we touched on before, it's been neglected, and it is such an opportunity there. I mean, what decisions and
so it's part of that. Yeah. It's part of our capital allocation, strategy, I guess, is to say, well, look, we've got this marvelous reserve that we've defined. We need to look now at the best way to go ahead and develop that and get the best outcome we can for shareholders. At the same time, the market cap's not reflecting that value. So if we can introduce that sort of buyback into the equation as one way to look to the shares are cheap compared to the asset value. So some of our capital can be directed to buying back the shares.
Well, we're seeing it's almost as we talked about the cycle, and it's not just Brookside Energy, but I've seen a whole host of different companies that are doing the exact same thing. They've seen that share prices naturally have been hammered in the politer sense over the past sort of 6 to 12 months, and these values and these assets have been so destroyed, unloved, and now it's like, well, it never should have gotten there, and it's now about recouping and taking that in, because there is still so much unseen value in it, and it's more about exercising that ability. And
that's right. So if we've got this cash and cash flow, and we've got it, and we've got good visibility on what those cash flows are going to look like this year and into next year, then to take a portion of that free cash flow to say, okay, we're going to look to acquire our shares wherever we think that the value is not being reflected in the share price, then we'll go ahead and do that. And it's something that many of our peers in the US have been doing for the last 12 to 18 months. So it's we're just joining the crowd, I guess.
And I mean, another thing I saw on the quarterly, or at least what the company is presenting, is that you're always looking for additional areas to explore. I mean, you've got such a monetized resource now. I mean, what sort of decision making, and as we talked about, you got historical data. What sort of decisions are made from your point of view, and even the team in Tulsa, in identifying where next to explore? Because it's, we talk, you see these maps on, a PDF, and it looks quite small, but then when you're actually in the field, it's hundreds and hundreds of kilometers in a way, and you just go, well, how do I even start? Where do I even start? I mean, what's going through your mind and the team's mind there?
Yeah, so look, I guess what we've shown in that Swish, the success we've had in our Swish AOI, is that we could take something from a concept to, at that very early stage of just looking at the data, looking for an area that was overlooked by the majors at different times, and seeing whether we could go in there and apply these sort of modern techniques to sort of extract the value. We now find ourselves, so that was sort of in 2018 that we started that work to really prospect and then get in there and start to take our first leases. You fast forward to today, there's been 80 odd horizontal wells drilled around the area that we are. We're completely surrounded by all the majors who essentially followed us into this area. So there are still those kind of opportunities out there. We're always looking for them, and we've now shown, to ourselves and our shareholders that we're capable of taking something from an idea all the way through to, very significant cash flow and proving up a large reserve. So that's fantastic. That's we've proven to everybody that we can do it. As I said, I touched on earlier, that Bradbury AOI is our next cab off the rank. That's a really exciting new area for us, and we're always trying to keep that top of the funnel, if you like, that project generation part of the business. We're always trying to keep that full of ideas, and it's a matter of choosing which ones we're going to sort of take a portion of our capital and direct that to testing those ideas.
And I mean, what's going through my mind now is, thinking about out to even your story and how you started in oil and gas, and the unfortunate reality of almost being kicked out and on your knees, and then to where you are now.
Yep.
I mean, two questions there. It's like, why oil and gas? What drew you to that to begin with? And I mean, looking at yourself now, I mean, what lessons have you really taken away in being in, I can imagine, a mentally exhausting position, and then building yourself back up to where the company is now, which is, so you get knocked down and then you go 4 steps up in a way. I mean, talk us through that.
Yeah, so look, I grew up working in the resources business. So I guess growing up in Western Australia, living in Perth in particular, is you get exposed to commodities and the cyclical nature of commodities and the resources business and the enormous wealth that can be created out of the resources business, for shareholders and so I think. I've always been attracted to that natural resources business. Oil and gas really, is unique in as much as it's one of the few places, and particularly onshore in the US, one of the few places where you can effectively scale something up. It's quite different to a hard rock situation where you might make you might take 10 years to make a discovery, drill it up and define a resource. And then you end up with this enormous capex that you've got to fund to build a mine and naturally deliver up the cash flows. And the oil and gas business is different in that you are able to drill one well at a time, so you can sort of scale up. And as the cash flow builds, you can sort of layer in more activity and really build up that resource without having to clear that huge capex hurdle at the front. So that's what really attracted me to the oil and gas space. Over that 20 years I've been working, in Oklahoma, I've met a lot of great people, and I guess that mix of the great people, the innovation that I touched on earlier, the hardworking people in Oklahoma that are constantly looking for ways to do things better all the time. I was attracted to that. It's very similar to the can-do attitude that you would find here in Western Australia. So for all those things, it's been a happy hunting ground for me. Albeit the challenges of
the ups and downs.
Of 2014 and the ups and downs,
Yeah, and I mean, now you've got, how would you say, a really good sort of outlook. There's a lot to work. I mean, you don't want to get carried away. And I mean, where do you envision the Brookside Energy going, and where do you see it sort of sitting on the
this is really
the stage?
This is just the beginning of the story, right?
Yeah.
Like, we're poised here to become a really serious, in terms of our production volumes, we're going to be a serious player here in Australia in terms of ASX listed E&P companies. We're going to be a serious player. We've got this huge reserve that we've now got to work out how to develop. It's exciting. Do we develop it ourselves? Do we do it in partnership with one of the very large, well-funded companies that are operating in and around us? What does that look like for shareholders? How do we get the share price to go up? How do we reward our patient shareholders? These are all fantastic challenges that we look forward to in the back half of this year and beyond.
Well, and that's what we said. It's this new stage of the company. It's gotten through that almost infancy in a way term, and now it's into this, it's blossoming and it's an exciting outlook. And for listeners that want to learn more about Brookside Energy and even yourself, where can they go to get more information?
Well, I guess the website's a good place to start. Yep. We've got an investor hub where we encourage our shareholders to communicate directly with us through our investor hub. But start at the website and pick up the phone. We're very approachable. The team here in Perth are always happy to take phone calls, talk to shareholders. I guess communicating with our shareholders and bringing them along on the journey is a super important part of, how do we close that gap between what the market's currently valuing the business and what it's worth in terms of the reserves in the ground.
No, thank you. It's been an awesome insight into Brookside Energy and yourself in particular. So thank you for joining me for, as I said, the first interview with television and up on YouTube. But no, thank you so much for taking the time to speak with me today. And I look forward to hearing from you again in the future and having you back to see how it's all progressing level by level and where Brookside is going. So thank you so much.
Well, thank you, Ben. It's been a pleasure.